New year of 2025, what is the outlook going ahead and which are the key themes that you can track? Let's try and find an answer to that. For this, we are being joined by Devendra Singhal, EVP and Fund Manager at Kotak Mahindra AMC. Hi, very good afternoon, Mr. Devendra, and thank you so much for your time. First up, New Year wishes to you and your entire team. Help us with your take on the market outlook, because the last year, the year gone by, we have seen a single-digit growth in Nifty 50, but the mid and the small end of the market definitely outperformed. Can we expect similar kind of a trade or return in this particular year itself, or this year could be the year for the large caps?
Hi, good afternoon, Srishti, and thank you for your warm wishes. Wishing our viewers also a very happy new year. Though you asked me for the market outlook, I wish it is the same as what it was last year. But I think last year people have made phenomenal returns, and that has been the case over the last couple of years. I would be really surprised if the similar kind of returns happens. Positively surprised, honestly. But I think that's not the base case which we are looking forward for the year, honestly.
Help us understand that what kind of a concerns that you believe could actually pan out for the markets, because this year is going to be quite an event heavy year in terms of in the near term. If we see, then US President-elect Donald Trump will take the charge, budget is right there, the earnings is a bit on the weaker side, or is it the valuation that is not giving comfort to you at this point?
So honestly, Srishti, last year was a bigger year in terms of the number of events which got there. Almost half the world went through an election, and biggest one being India and US therein. I think what would drive the markets from here on is basically the earnings growth. I think that's the only hiding space or the only margin of safety which you have across for the full year. Wherever people would be comfortable with the earnings growth and it would be better than what is being expected, you could expect things to be moving in that direction. And honestly, we are not seeing we are not very pessimistic about the overall earning growth for specifically FY26. It's still a mid-teens number if we go by, specifically in terms of Nifty. And we have seen wherever the earnings are coming up, even on the mid and small caps, those stocks are being rewarded handsomely by the market, and vice versa. Wherever the earnings are disappointing, you are seeing a beating also. So I think it would all play down on how the earnings would look out. At this point in time, we are comfortable in terms of how the earnings are likely to be placed for FY26. But having said, valuations are not cheap. They are relatively decently valued, slightly on the higher side of the overall valuation range.
Taking cues for the upcoming earnings, Devendra, is the Q3 updates, and just today itself we have the Q3 updates coming in from Avenue Supermarts. Why I asked so, because this whole consumption theme has been in focus, and that was one of the weakest link in the market in the year gone by. But given the kind of updates, Devendra, is it giving you some confidence to go ahead, and even the valuations are giving you some confidence for a brighter outlook, and taking cues from that, maybe the staples can also see some bit of a allocation in the times ahead. Any take on this, Devendra?
So you are right, Srishti. The kind of updates we have seen specifically from likes of DMart and few of the outlook which came monthly numbers came from the auto side. We did saw a pretty sharp rally because expectations were pretty low in terms of how things are being panning out or the narrative which was being set up. Though both the auto numbers and the few updates which are coming up from the consumption names is pretty robust. So I would say definitely we are optimistic about the overall pickup in the consumption side. It is definitely led by more on the rural side, which is going faster than the urban. But I think over the course of next few quarters, you should also see the urban consumption coming back, led by so many factors, more so on the infrastructure spend and the inflation coming down a bit therein. So I think, yeah, we are positive. But in terms of staples, I think people are still a bit wary in terms of the volume growth which is being there. Once you start seeing the volume growth trajectory moving up, I think definitely there could be a case for them also to be looked at.
All right, but Devendra, help us with your take on the pharma as well, because the earnings have been fairly decent in the last couple of quarters. If we look at the index, that has also been performing well. But should one play the pharma sector at this point in time, and within the pharma space, any particular segment that still look attractive to you?
See, if you look at the long-term trends, pharmaceutical or the healthcare segment definitely warrants a positive outlook. But here we are talking about 5, 10 years therein, because the overall population is aging and is aging rapidly. The lifespans are increasing, so are the basically the lifestyle-related diseases which comes alongside. So overall, spend on healthcare are bound to increase, both on the hospitals and on the medicines and other ancillaries. But how much of it is already being priced in by the companies or the in the share prices? I think it's difficult to say. But yes, we are looking at this sector constructively. Within this space, CDMO, which is basically content development and manufacturing of these drugs, that space is looking pretty interesting because you are getting bigger orders, and the China Plus One is also coming up pretty nicely for this space. So I think that is one space we are actively looking out for opportunities, and wherever we find one, we are looking at investing in them.
Before we wrap this discussion, your take on the quick commerce space as well, because of late that theme has been totally buzzing on quick commerce, or as well if we include some of those newly aged tech companies as well. Do you still believe that the market interest will continue to be there in this particular area as well?
See, honestly, we have been a beneficiary of this entire run in the quick commerce or the new age tech companies. And we do believe that, there's a huge scope for both these new age companies and the traditional ones to coexist side by side. India is a huge market, and there are different audience which wants to pay for convenience also. So going forward, we do think quick commerce has a long run. Now, how much of that is being priced? I think that's a very subjective call. We do see the space constructively, honestly, at this point in time.
Devendra, with this, we let you go on that. It was great chatting with you and helping us to see some of these different sectors from your lens. That was great to have a word with you. Thank you so much for it.